Hey everyone, in this video, I'm going to bring you one growth stock that's down 69% off its high that I think makes an excellent buy going into 2024. Now, I'm going to show you what the growth stock is. I'm going to look at its critical financial metrics, and I'm also going to look at its valuation to answer and tell you why I think this is an excellent growth stock to buy. So let's jump right in. Let's see what the stock is and let's look at the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the growth stock that I am talking about in this video is Okta. Okta, the cybersecurity company. Now, I know what you're thinking. The cybersecurity company had some negative headlines because of a data breach, and that is true, although that could partly explain why the stock price is selling at an attractive valuation. So let's look at some of the details of Okta. So one thing to note is Okta has excellent revenue growth over the years, growing from about 200 million in revenue in 2017 all the way up to 2.168 billion in revenue in the trailing 12 months. Now, given that Okta operates in the cybersecurity industry, it's likely to grow for several more years, perhaps even 1 or 2 more decades. Of course, not at a rapid growth rate as it has done in the previous 5 years, but growth to be sure in the double digits maybe, or maybe high single digits. Certainly in the next couple of years, Okta is expected to grow in the double digits. Let me show you that here. So according to analyst estimates, Okta is expected to grow revenue at 10.3% in fiscal year 2024 and then accelerate that growth to 13.3% in fiscal year 2025. That's expected to boost earnings per share by 32% in 2024 and then another 24% in fiscal year 2025. Solid growth in the next 2 years, estimated at least, but I suspect that growth will last longer because the industry is growing, and as long as Okta keeps its market share constant, it will grow along with the industry as the industry grows. Now, if it gains market share, it can grow faster than the industry growth rate. But that's the positive when you're operating in an industry like the cybersecurity industry that's growing because it's becoming more of a necessity. It's becoming a more of you have to have it instead of it was nice to have it. Nowadays it's you got to have cybersecurity, and more regulators are mandating that companies have cybersecurity measures in place. So that's all a tailwind for the cybersecurity industry and Okta as well. So the good news is that Okta is also cash flow positive, generating cash flow from operations of 156 million in its most recent quarter, and it's generated positive cash flow from operations in nearly every quarter going back to July of 2021, with 2 quarters of slightly negative cash flow from operations in this entire time period. So you can safely say that the company is positive cash flow and self-funding, self-sustaining, does not need to go back to investors and ask for more capital, although it has raised a lot of capital from investors and diluted shareholders while paying out some stock-based compensation, which we will talk about later in this video. While Okta is positive in terms of cash flow from operations, it's still negative in terms of operating profitability, although it is making excellent progress. Negative 107 million in operating income in the most recent quarter, but that was an improvement from the bottom of 260 million in a quarter in operating income. So it's moving in the right direction. I don't mind seeing companies have negative profitability, especially growth companies having negative profitability, as long as they show me that they're making progress in the right direction. They got to show me they're making progress in the right direction. I don't like to see companies with negative profitability and that profitability getting worse as the company grows or even staying constant. I want to see, as revenue is growing, that the losses are shrinking and it's approaching profitability, which Okta is demonstrating to me. And in conjunction with the positive cash flow from operations, I like the direction this company is headed. Now, I mentioned I would talk about average diluted shares outstanding. The number of shares outstanding is an important financial metric. If a company issues more stock because it is running out of money or it wants to invest in a new growth project, it has the potential to decrease your earnings per share. Look up here, when I have a net income of 1,000 and shares outstanding of 100, my earnings per share is 10. You take the net income divided by shares outstanding and you get 10. But now let's say you increase your shares outstanding to 200 and you have the same net income of 1,000, now your earnings per share is just 5. The same is true in the opposite direction. If a company is losing money on the bottom line and it issues more shares, it spreads out the losses across more shares, thereby reducing the loss per share, which is a tricky way to reduce the loss per share. Look at this point here. A net loss of 1,000 with 100 shares outstanding creates a loss per share of 10. But if you take that same net loss of 1,000 and you spread it across more shares, 200 shares, you now have a net loss per share of just 5. So it's a tricky accounting trick to get your losses reduced on earnings per share. So you want to take a closer look to see where the improvement in the loss per share is coming from. That being said, you can see Okta has diluted shareholders significantly from about 110 million shares outstanding all the way up to 164 million shares outstanding and almost 50% shareholder dilution. And you can understand now why Okta is able to generate positive cash flow from operations while still being negative in operating income, because stock-based compensation has to be accounted for on the income statement, but it's not a cash expense. Okta is not giving them cash, it's giving them stock as compensation instead of cash. And so that allows the cash flow to improve, but it still accounts for an expense on the income statement. So that's why you see that difference in Okta's operating income and its cash flow from operations. So looking at Okta's balance sheet, you can see that it's a strong balance sheet. It's not pristine, but it's solid. It's got 2.1 billion in cash and short-term investments and about 1.3 billion in total long-term debt. Anytime you see a company with significantly more cash than long-term debt, then debt is not a risk, because it can use the cash, just pay off the debt, and it'll still have about 800 million in cash left over. So in this case, in these cases, long-term debt is not a problem for companies that have cash in excess of the long-term debt, because if it becomes a problem to refinance or interest rates rise, they can always use the cash to pay off the long-term debt if it's opportunistic for them to do so. And finally, the last reason why I'm going to discuss Okta as an excellent growth stock to buy for 2024 is the relatively cheap valuation. You have not been able to buy Okta stock at this valuation in the last 2.5 years. So Okta right now is trading at a price to free cash flow of 36.76. And you can see, going back all the way to January of 2021, this is right about the lowest you've been able to buy this stock for. This is about the lowest. The valuation has been considerably higher going back several years because of those factors I discussed earlier. The company's cash flow positive for most quarters. The company's operating in an industry that's growing and is expected to grow over the next 1 or 2 decades. And the company's balance sheet is relatively strong. And so for all those reasons, investors have been excited about getting into Okta stock whenever they've had the opportunity. So this might be an excellent opportunity for investors to buy Okta stock at an excellent valuation going into 2024. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.